It seems the market's going nowhere right now in this moment. We had a decent day yesterday on Wall Street and on Friday post that jobs report, all about Fed rate expectations. Some of that data has been deteriorating, and I know that we talked yesterday about the City Index, surprise index, being down in negative territory now. I wonder when do you think that it isn't about Fed expectations anymore and the weakness of the data starts to drive things?
I think if we get consistently weaker data, not just weaker than anticipated, I think this is really important. People have talked about the idea that we need 3 softer than expected prints. I actually think you need 3 soft prints to change the narrative in the Fed. So at the moment, we're pretty in a directionless kind of area for the Fed. We've just had the Fed meeting. They've reiterated their dovish reaction function, but admitted that they got the whole economic narrative wrong, and therefore they have no clue at the moment which way we're going to go. And so therefore, it's hard to have a particular conviction on the yield move in the short term. And that's why I think that ultimately for the next few weeks, it is a steepening dynamic. Maybe not a very exciting one, but because of sticky inflation readings, I think the back-end yields will continue to see upward pressure, whereas the front-end yields are kind of capped for now. Where they go later on, it'll be tough to see. I'm still pretty bullish stocks, and the economy, it's important to note that while we're seeing a little bit of softness come through, it is very mild softness, and it's on the back of a long period of better than expected readings.
Yeah, absolutely. And that very much stands out from those charts we were looking at yesterday. What about the yen and latest expectations there, then, Mark? We have heard from the Japanese top currency official saying the government will take appropriate measures if there is excessive or disorderly movement. I mean, so far, so ordinary. But this seems to have been taken as guidance that maybe there isn't more intervention coming.
Well, look, we talked a couple of weeks ago that if the BOJ came or the MOF came and intervened on behalf of the BOJ, well, then macro hedge funds around the world would be celebrating as a chance to sell the yen at better levels. I am still very bearish the yen. Bearish the yen on crosses, though. It's really important. We might be at a big turning point in the dollar, and therefore the dollar-yen trade is less exciting now. But I think the yen, all the fundamental reasons for yen to depreciate remain the same. Deeply negative real yields, a sluggish economy, and a need to import commodities in a world where commodities are expensive. But now it's about being bearish yen on crosses, not against the dollar.